Howard Silverblatt. He's S&P Dow Jones Indices Senior Index Analyst. Howard, it's great to have you here. And I guess just walk us through the thought process here of why adding Nvidia to the Dow makes sense at this juncture.
Well, in order to add Nvidia, obviously you had to take something out. Intel was a difficulty. The issue was in the low 20s, and because it is a price-weighted index, it did not have a material impact on the index when it was moving. Didn't represent the weighting within the index where we wanted to. Nvidia, on the other hand, even though it is less than the average, stock in there comes in at about number 22, does better represent the field and has more of an impact on the index. Again, the index is price weighted. As was mentioned, Sherwin Williams has a lot more weight than Nvidia, yet Nvidia is $3.6 trillion, the largest public company in the world. So again, the Index Committee was looking to keep representation in the not just technology, within the semiconductor field on there, and it has done that. We currently have about a little over 19.4% of the index weighting in the Dow in information technology. Is the market value significantly more? Yes. If you look at Apple, Microsoft, and Nvidia, it's over half the actual market value, but the S&P 500 weighting is different than the Dow. The Dow gets market weighted. So those issues, which would be over half if we market weighted, is only about 11%. So again, the weighting is very important here, and the price. And Nvidia, again, comes in on the lower side of the weightings, but it represents the field and keeps us within the technology where we need to be.
You know, as you think about a rotation like this and a swapping of companies, both for Nvidia and for Sherwin Williams making their way into the Dow, the committee who oversees this has often been looking at how to make sure that this remains a modernized index here and reflects the modern economy. Are there other names that you anticipate could be on the chopping block in the near future?
We do not comment on potential changes on there. It's actually the market that makes the determination, how it moves up and down, what goes in and out to some degree. The committee then looks at that and decides what actions, if any, have to be done. Again, on this kind of a situation, one of the bigger items, you mentioned Sherwin Williams. Well, before we had Dow, the materials weight was less than 1% in the index. Now it's 5% because Sherwin Williams is such a higher weighting. That's a big change, mathematically within the impact an issue has on the index. It is the sixth largest in there. So again, the market itself is making the actual pricing and the determination. The index committee looks at that, translates it into an index and says, what do we need to do to best reflect what the market is doing?
Howard, I'm sure you do have some data on this, but just in terms of the inclusion of Nvidia or past stocks here within the Dow, any impact that will likely have on performance, on perception? What do we typically see?
Some of the attributes definitely change. The PE gets slightly higher. The yield comes down a little bit, but again, the Dow, even at about 1.6% adjusted now, it's about 1.75 prior, is still significantly more than, let's say, the price-weighted S&P 500, which is about 1.25. So yields go down a bit, you're paying a little bit higher, but the issues are reweighted at this point in time because you've taken out a low-price stock, Intel at this situation, put in higher prices. So it is a material change in how the impacts go. The rule of thumb right now for any issue that changes $1 in the index based on the new divisor and the new setup here is that the index moves 6.15 points for every dollar any issue moves. And that helps in order to figure out who's impacting what. The old number was 6.55, so it's had an impact on those.
Howard, just lastly, while we have you, we've been able to talk buybacks in the past as well, and as we think about the delta between buybacks in 2017 to 2018, after the initial Tax Cuts and Jobs Act was put into law by then President Trump, and now thinking about the roll-off, but the extension that we're expecting as well in 2025, how might you expect that or anticipate that to also flow into even more corporate buybacks that may come forward and that the market is trying to wrap its minds around?
Well, we're in a good month to discuss that because November is typically a very busy month for buybacks at this point in time. Also, we have the tax, you mentioned the tax situations for the 2017 expiring on the table, and very likely is an increase in the taxes on buybacks. Currently, it's 1%, having about a 0.48, 0.47% impact. Half a point it's costing the S&P 500 as far as taxes go. But definitely an increase is expected. It's on the table. We feel about anywhere about a 2.25% to 2.5% tax rate would have an impact on buybacks, and therefore reduce the amount of buybacks when you and therefore reduce the impact that buybacks have on EPS. Remember, when you reduce your share count, your EPS go up. Your PE goes down. It's more attractive. You technically own more of that stock, and it supports the stock. So buybacks definitely contribute to the market support, and they definitely will go into a headwind because of the potential tax increase at this point in time.
Howard Silverblatt, who's the S&P Dow Jones Indices Senior Index Analyst. Howard, always a pleasure to get some of your time and insights. Thanks so much.
Thank you.